Well, thank you for watching this video on the BCG Matrix. Over the course of the next several minutes, what we're going to do is define and describe what the BCG Matrix is, kind of its purpose, what it's used for. We're going to walk through the matrix. I'm going to graphically kind of draft this out for you so you can see how the matrix looks and what its purpose is. And then we'll go over some strategies on what to do based upon your findings in the BCG Matrix. Essentially, how do we use it? So the BCG Matrix was developed in the early 1970s, and it was developed by the Boston Consulting Group, which is a very popular consulting firm. And it was developed as a way of determining how companies can allocate their financial resources. So the idea is that many companies have a number of different product lines, and we need to be able to figure out how we're going to allocate resources. We shouldn't necessarily just split everything 50-50 and each particular product line gets the same amount of resources. We should have a little bit of a maybe better methodology for distributing those funds. There should be a more accurate way for us to determine how do we get a better return on our investment. And so that's kind of the purpose of the BCG Matrix. And so the matrix itself looks at a couple of different areas. The first thing that it looks at is what we refer to as market share. And so market share, just very simply, is the percentage of the market, so the overall market, that the company controls. And market share is expressed in a percentage. And so if I were to give you the example and say that the company owns or has 40% market share, and the market itself, let's say, is a total of worth $100 billion. Well, then our company, holding 40% market share, would have revenue roughly of $40 billion. Because it maintains 40% market share. And so typically we look at revenues when establishing market share. So that's one of the variables that the BCG Matrix considers. The next variable is what we call market growth. And so market growth is the percentage that the market is expanding. Market growth is a measure of kind of market attractiveness. And so obviously markets that are growing at higher percentages are much more attractive to companies because there's more opportunity there. In markets that are very, very not necessarily small by size, but are not growing significantly, it's not as attractive because typically what happens is you have already established and very dominant companies, and competition is very, very fierce in markets that are characterized by low growth because you're fighting over kind of a fixed pie, if you want to imagine it kind of like an actual pie that you would eat. The size of that isn't growing, and so what happens is that companies have to fight over kind of their piece of the pie. Now with market growth, if it's increasing significantly, then the size of that pie is changing. And so competition is less fierce because everybody can kind of stake their own claim a little bit because the market is still growing by a significant rate. And so those are the two variables. Now with market share, one of the assumptions that the BCG Matrix makes is that if a company has high market share, then usually it's fairly successful from a financial standpoint. And usually to have high market share, if you look at it from that perspective, you typically have to be around a long time, benefit from economies of scale, customers have purchased your products and probably been somewhat satisfied if you're going to generate high market share. And so usually that's a reasonable assumption, although there's probably always exceptions to everything. So now that we know the variables in the BCG matrix, let's go ahead and plot out the matrix itself and kind of go over some of the different components and things that are included in the actual matrix. All right, so here is the actual matrix. Now what we have to do is we kind of have to plot our variables. And so down here, we're going to go ahead and list market share. And this is going to be high market share here, and this is going to be low. And in this area, we're going to list market growth. With high market growth over here and low market growth is going to go here. So a little different, right? Usually you'd think that the high side would be over here, but it's kind of reversed, at least for market share. So there are 5 different boxes in this matrix, and each of these boxes signifies a kind of a label that we put on a particular product. And so just going through these one by one, the first one is what we call a dog. Now, dogs are characterized by both low market share and low market growth. So what that means for you as the business owner is you don't have necessarily a big position in this market, right? It's very small. And so if you were to look at this, you know, this product, it generates such a little number of sales or revenue for you that it's relatively insignificant. So it's not important to you. Now, the other side of it is the market growth. It's very, very low, which means that the market is very competitive. So if you were to look at what do we have to do to maybe change this, right? What do we have to do to get this product off the ground? Well, you have low market share, so chances are people don't even know about you. So you have to increase awareness, which means you're going to have to advertise and promote, and that costs money and time. But then you look at market growth. Do we even want to be in this market to begin with? Right? It's a low growing market. If anything, it may even be declining. So if we spend all the money and resources trying to establish a position, or even going to be around in this market, is it going to be present in 5 years? If that's the case, maybe it's not worth it. Now, the next area is what we call our question marks. Some versions of the BCG Matrix also refer to these as problem children. And the reason it's referred to question marks is that we really just don't know what to do with these. And problem children because they generally are problematic. Because this is kind of an executive manager's or business owner's nightmare. These operate in low market share, right? So we have a very small position in the market, similar to dogs, but they have high market growth, and so there's potential here, right? There's less competition. It's probably a newer market if it's at a higher growth rate. And so what we have to do here is we have to commit financial resources to figure out if this product could potentially be successful. Now, truthfully, we don't know, which is why it's a question mark, because we can commit financial resources to it, but at the end of the day, it might still be a dog. And so that's the decision that management has to make. And this is why this is probably the most difficult area of the BCG Matrix to figure out what to do with. The others are straightforward. But this particular area here, there's a number of different strategies which we're going to go over you can do depending upon what you believe, I suppose. Now the next area is what we call our stars. Now notice that these stars are both characterized by high market share as well as high growth. And so that means a couple different things. The first of which is that we have a large position in the market. We are likely the dominant player, right? The market leader, or maybe 2 or 3. We have a very large market share. And so this product, whatever it is, generates a great deal of revenue for our company. Because once again, keeping with the assumption that high market share leads to high revenues, which is fairly reasonable. But the other end is it's in a high growth area, which means that the market is continuing to expand by large percentages, which means there's still opportunity for us. So there still is certainly potential in this market as well. And so these are definite stars, obviously, thus the actual label. They generate a great deal of revenue for the company, but they're also in growing industries that are very, very attractive. So certainly a place that all businesses would hope to be in. Now, the last area of the BCG matrix is what we refer to as our cash cows. Now, the reason these are cash cows is because these are in high market areas, meaning that we control, once again, a large position in the market, most likely a controlling stake. But the difference between this and stars is that we have a very low growth rate in this market, which means that there's not a lot of potential, but there's also a great deal of competition. Now, the difference between this, though, is that we're not trying to establish ourselves as the dominant player in the market. We already are the dominant player. And so we don't have to be concerned with advertising and promoting because we already are going to benefit from having that large position. And so usually what happens here, the reason they're called cash cows is because they kind of sell themselves. There's brand awareness, there's recognition, you don't have to promote and advertise. It's in a declining market, so usually what happens is companies reduce support as a way of generating as much cash as possible because once again, there's already a great deal of awareness about these products. So now that we know what the BCG matrix is and some of the components included, we have to figure out, well, what are our strategies going to be? There's a number of different things that we can do to develop a actual strategy related to these areas. So let's identify some of those strategies. What we can do, we can build market share. We can execute what we call a hold strategy. We can go with a harvest strategy, or we can divest. And so really quickly, building market share means we're going to make additional investment. Okay, we're going to increase our investments in this particular product. Hold, we're going to what we call maintain the status quo. We pretty much do nothing. Harvest, we're actually going to go ahead and we're going to reduce our financial support. And so with build market share, we're investing, and harvest, we're reducing investments. Maybe not eliminating them altogether, but we're going to reduce the amount that we put into the product for advertising, promotion, those different sorts of things. And then lastly, divest, we eliminate these. And so looking at these strategies and applying them to the BCG matrix, the first thing that we do is the dogs, we eliminate those. Right? They're sucking up a lot of cash. We don't necessarily want to invest in them. Remember, we have very small positions to begin with. It's going to take so much just to generate any type of market share. And truthfully, it's a low growth market, very competitive. It's declining. We don't necessarily even want to be there. Now, the problem, though, is the question marks and the problem children. Now, technically, we can eliminate these, right? We can go ahead and divest from our position. But truthfully, you don't know if they're going to be profitable. You don't know if they can turn into stars, and that's what the goal is to get your question marks or problem children into stars. And so to do that, you're going to maintain or build market share. So you have two options, really. Either you put a little investment into them to figure out if they can potentially be a star, or you get rid of them so you can use your financial resources to put towards something else. Now, with regards to stars, you can do a couple different things. Usually, you would execute a hold strategy. You can also utilize a build market share strategy. Once again, you're in a high growth rate, so you certainly can carve out a bigger piece of that market for yourself. You can just hold. You are the dominant player in the market, so simply we're going to maintain status quo. That's certainly an option. Now, eventually, stars become cash cows. And with a cash cow, usually you engage in a harvest strategy, meaning we reduce financial support. The product is already going to sell itself. It doesn't make sense if we continue to put more advertising dollars into it. Instead, our focus here is on generating as much cash flow as possible, kind of milking this thing for all of its worth, thus the term cash cow. And so those are the strategies that you would use depending upon which area your product lies in the BCG Matrix. So once again, you certainly have to consider the market share. What do you control related to this market specifically? But also, what is the market growth like as a way of determining how are we going to allocate resources?